We did see a new all-time high for the S&P 500 today, which is very much looking like a blow-off top to me. I don't know how we go much higher than here. I think the valuations are at the far end of the extended range. PE ratios at some companies are 25, 26. The S&P itself is at that level. Some of the AI stocks, like, if you look at infrastructure stuff like NVIDIA, they're still in an okay range. They're at like 19 on their PE ratio. But I would argue that the stock market is significantly overvalued at the current price points that are out there, and it's not sustainable for an extended period of time. I do believe that we're going to see a significant pullback in the stock market that's going to be exacerbated by the reverse carry trade, or even brought on by the reverse carry trade unwinding. So that kind of leads into some of the other macro that's going on. We've seen the Bank of Japan intervene at least 4 times in the last, not good. The IMF will step in after 6 interventions on the yen and start very much regulating the exchange rate for the yen. And they don't want that. So they're really backed up against a corner here. They really have maybe 2 more times that they can step in and intervene in the market before the IMF kind of steps in and takes control of the situation. I think that they're still going to raise interest rates there in Japan, and that is what's going to, drive the reverse carry trade, or the Japanese carry trade, however you want to call it, to unwind globally. It'll be a credit crisis, it'll be a liquidity crisis, and we know what the plan is when that plays out. So excited about that, which is unusual. Like, if you didn't know that there was a plan in the background and you weren't invested in that, you probably have, an apprehension to being excited about that, to see your stock portfolio plummet 30 to 50%, the bond market have volatility like it has. Monday, again, just kind of circling back to that, we saw some significant volatility in the bond market. Multiple people, dumping U.S. Treasuries and moving the yield significantly here in the U.S. And also in Japan. So I think we're still on the precipice of things kind of playing out here. The Bank of Japan has also come out and said that they're going to, I don't know if it was referring to meeting minutes for the monetary policy meetings, or if they're allowing themselves to kind of step in as needed to be able to manage the market and the risk associated, that the yen currently has. I tend to believe the statement leans toward the latter, but we'll see if that's the case or not. Emergency meetings for the Bank of Japan have never been a thing. It's never happened. The Fed has obviously done that a couple different times in our history and moved monetary policy significantly that's not factored into the market. And obviously we see, the market's alwa's forward looking. It's looking forward for the next 6 months, and people are projecting things based on the information that they currently have at hand. So whatever they believe the market's going to do over the next 6-month period is how they're buying and positioning themselves. Again, with the S&P being where it's at, significantly overvalued, really everything, because of the M2 money supply and the inflation that we've seen in our economy here domestically and abroad. Pretty much every currency has been inflated over the past 5 years. Costs have significantly gone up for those that live in those regions. Now, depending on where you go, I was actually talking with our CMO about this earlier. He lived for a little while in Japan, and when he was there, it was 80 yen per 1 US dollar. If you went now and things remained similar cost, which I would expect that they would, it'd be up some, but not significant. Your dollar goes a long way. If you haven't traveled the world, I would highly, highly, highly encourage you to do so, right? If you have a stronger currency and you travel and you go abroad, you could go to Japan right now and you would be doing pretty well if the majority of your wealth was denominated in dollars. So thinking about that, if you're going to travel and you do want to experience, different cultures and places, you might want to look at the exchange rate and then kind of plan where you want to go based on that, because your dollars do go a lot further in other economies. But back to, the things that are at hand here. Still waiting on the Bank of Japan to come out and raise interest rates. They're facing significant inflation in their economy. We've seen them intervene in the oil market. Also, they're shorting oil. We've seen that drop back down to 15,000 yen per barrel. I don't think that they're going to be able to do that very long. I think that that could actually cause a short squeeze in the market, and we could see oil push much, much higher. We've continued to see that climb here in the U.S. Brent and crude both up significantly, continuing to push higher because the strait is, still shut down. So, again, like I've said many, many times, I feel like they're backing themselves into a corner, and they really don't have much runway left. Now that they have intervened 4 times at a minimum, I saw another big dip in the yen versus the USD a little bit earlier this evening. I don't know if that was them intervening or not, but if it was, that would be 5 times. And they only get 6 before the IMF steps in here. So we'll see what actually ends up transpiring. I do believe that they are going to have to raise interest rates, having to step in and, kind of take control of what's going on over there. So, like I mentioned, if they already did a 5th time, they're really out of runway. They're the only other option that they're going to have, instead of jumping U.S. Treasuries or buying back bonds. They can't really inflate their currency because they're already under inflation, so they can't print yen to be able to buy back those bonds. They got to raise interest rates. Like, that's the last card that they have left on the table, to be able to navigate this situation. So we'll see if that's in the near future. I'm feeling good about May. Feels like a lot of things could move here in a very short period of time with how things are currently sat in the macro. But maybe there's something I'm missing, right? Like, I've been off on time frames before, so just give me some grace. I'm just trying to relay to you guys what's actually going on, so that you're aware of those things and you're able to prepare yourself